Good day. Super excited. How are you doing? It's a new week and I'm really excited. You're welcome to the Financial Trading Culture Series, an episode in my Owolabi TV that is focused on you learning how to approach the financial market, either the Forex market, the cryptocurrency market, or the stock market. And guys, in this episode, I want to share with you a case study of what we dropped on the Telegram group that everyone had access to. Now, like I do tell you, it's not the best to be catching every move, but you want to focus and leverage more on the higher time frame and then always be in the direction of the trend. Always know that the trend is your friend. No matter how much money you need, you have to be consistent with the approach of trading, because this is what is exactly missing in the trading space, where a lot of time people are after making money, ignoring that they are also risking their capital. One more time, this is your first time visiting this channel, you want to make sure you click on the subscriber button so that you would not miss out in any of the next amazing episodes we're going to be giving out to you guys. Guys, smash on the subscriber button and click on the notification bell, and we'll take it up from there. So let's get it rolling, guys. As usual, this is EURJPY, and this gave to us over 1 to 25 risk reward. When I mean 1 to 25 risk reward, guys, it means that you have risked $1 to make $20, $25. If you risk $10, you have risked $10 to make $250. If you risk $100, you have risked $100 to make $2,500. And if you risk $1,000, you have made $25,000. That is the approach you want to use to trade. I've shared with you guys how to use the calculator so that anytime you're going into the market, you are so much focused on what you're risking. This is what separates the business people in the trading market, in the trading space, compared to the gamblers. Okay, so let's get to the board. I'm going to do a thorough breakdown on what we are actually expecting in this space. Okay, we had the low on monthly here, and we had the peak here. So the market dropped, having broken these zones. Okay, having broken these zones and these zones. So that means that EURJPY is more likely to come up to this place. Why? Because he has to complete a reversal. You want to take it from a reversal, take it from a reversal, take it from a reversal. Okay, now when the market drops, the reversal is that the market needs to go back to the top. So when it goes back to the top, we're going to be picking our sell entry from here for the market to drop. However, while the journey is going on, we can see that there is also another amazing reversal zone, which is a rally base drop here. Okay, good. You also have the change of trend, two trade of trends, which are proof that this zone should be a very strong zone. So what we expect is that the EURJPY should push up into this place for a potential sell and return back into this buy for a continuation to the main top. So we're going to be having something like this. Okay, retrace back, then go back up. Okay, so that's what we're going to be looking at. However, we're able to catch this move last week, which was posted on the Telegram group. So let's, from here, we go to weekly. And when we go to weekly, we're able to, we'll see that we have this flip zone. So on this flip zone, it took us to 1 hour daily. And on the daily zone, we're able to catch around that flip zone. We're able to catch up on this rally, base rally. So this is the exact buy zone that we identified. And like I do tell you, the goal is you catch up on your higher time frame, you identify your higher time frame, then you go to your lower time frame to catch your moves. Okay, so when this guy got to this zone, okay, I went to 30 minutes, and on 30-minute time frame, we're able to identify what the market has the capacity to do. Now, our rule of engagement for lower time frame has been met here, and that told us to come into this buy zone, and we are good to go. Now, you need to understand that it could require you to wait, because what's the essence of you trading actively and you are losing a lot of your capital? Guys, it doesn't make sense at all. So we have to be patient. We have to be patient, because when I dropped this trade on the group, EURJPY on my mind as posted in the community, this was what I dropped on the group. And you know, this was posted April 5. And guess what? It held on. You know, it held on as if it was not going to come back. It went up, went up, went up, went up, went up. So what do they do around this zone, guys? They use this to collect people's money. Now, if you are conversant with what we call liquidity, all these zones are liquidity. They collected people's stop loss here. You know, they created another level. They went higher. Some people would have sold here. They collected their stop loss again. Now, eventually they dropped. They collected their stop loss. So this is the challenge with intraday when you're really, really trading like scalping. Okay, you will trade a lot, and you have to be able to make sure you're using a very reasonable lot size so that you can be consistent with profit. However, when you trade with the ITC approach, this gave us the zone for us to pick out this trade, and we're good to go. So eventually the market went up, and guess what, guys? It came into this place on Thursday. Fantastic. And that was it. So when it came in here, I remember in our Discord group, a lot of people felt that the market has left us. Now, when it comes to mitigation, the institutional traders, they have a way of trading. Because it didn't get to the demand zone, they know what they're doing. I remember that some people in the group eventually deleted their pending order. But I'm used to it, and I know that it's all about being patient. So immediately it went up, gave some amazing profit, and what happened again? It came down back. And this time around, it came into that expected demand zone. Can you see the touch? Which is the same entry zone I dropped here. That's about 134, 87, 134, 900. And immediately that got there, guess what? It picked that trade. It picked that trade, and we have close to about 8 pips stop loss that we are to risk. I like to be, you know, like 10 pips is better. If it's 7 pips, this is 6 pips. You want to always put extra, like 2 pips extra to be safe, so that you don't want the market to come catch you up. Okay, so I said when it gives us 1 to 5, take profit. 1, good. When you give us 1 to 10, take profits. Take profit 2. Then the third take profits, leave everything, just break even and let it go. Now, because we entered on daily time frame, we have to take this third one in alignment with the the monthly time frame. So look at what happened when the market got triggered. TP1 met, TP2 met, and right now it gave us as far as TP3, okay, which is about 1 to 30. Now, personally, I'm still holding this trade. I dropped an update on the group, on the community on Friday, okay, and it's amazing. See, you can see my entry at the peak, and I ended up adding another position on the continuation. And right now, we're still holding this trade to the top. So this is exactly what I'm talking to you guys about. So even if you have traded 3 trades in a week or 4 trades in a week, you are wrong. Maybe you are wrong in all the 3, and you have lost 1%. That is 3%, which is not bad. Then number 4th trade, you are risking another 1, and this 1% gives you 30% return on investment. So 30% minus 3, you are left with 27% right now. Oh, you are not able to hold it to this top. You are only able to catch 1 to 10. That's 10%. 10% minus 3, you're left with 7% in a week. Which in the group, I always tell you guys to always take your 1 to 5, take your 1 to 10, and leave the third trade to run. This is how we held GBP card for 1,000 pips, and right now we are expecting EURJPY to give us an amazing, let me buzz you guys on this guy. So we're expecting another 1,000 pips here. Okay, and if you're still holding it, that would be like 1 to 100%, 1 to 100% risk reward. So is it going to be smooth? Guys, it's not going to be smooth, because this will now give us something like this. To go up, it will retrace as if you were wrong, then it will go back again. Before it gets there, it will retrace again. You will feel like closing it, then it goes up. Now, all this retracement, all these corrections are zones that allows you to know this is the work that you are doing. Because a lot of time people think Forex is, yes, Forex is not hard work. When I mean hard work, you don't have to use your hand and all of that, but it's a lot of mental work to be able to see $500. You held it, and the $500 came back to $250, and $250 went up again to about $1,000, and $1,000 came back again to $300, and the $300 went back to $2,500. It's a lot of mental work, but for you to overcome that psychologically, you want to be able to cash out. Because take profit 1 could be 1 to 5, your take profit 2, 1 to 10, leave the third trade to go. And this is how we held GBP card 1,000 pips, USD JPY over 900 pips, GBP USD over 780 pips, which is still currently running. So you need to be able to answer all these questions. Who am I? Am I here to trade, or I'm here to make money? That is left to you guys. Thank you so much for always following. Go to your chart, take your time to study, use your strategy, be consistent with it, and I look forward to your success. Don't forget, keep winning, keep investing, and keep multiplying your money. I look forward to seeing you in the next episode. Don't forget to click on the video, subscribe, and the notification bell so that whenever we upload, you are going to keep making the money. Guys, don't forget, every Monday also, let me give you an announcement. Every Monday, we give out trade for the week under my Owolabi Motainment. So if you've not registered, you want to make sure you go and register under our Mo Digest program. Every week, we give you the choice of cryptocurrency, we give you the choice of Forex, and we give you our stock asset for the week. Guys, that will be all for tonight. Have a pleasant day, and I'll talk to you guys soon. Peace out, guys. Bye-bye.